There was a model I taught last week somewhere else now, and this is kind of what I wanted to discuss with you guys here. Okay, now I came out and I basically said, look, you don't need a break of structure. I've said that for a long time. My students can say that, you know, I've been saying that in the recordings for years. Okay, you don't always need a break of structure. It's not required. There was a model I taught last week around mitigation, you know, what to look for, when to look for it, and also other variations. So interchangeable parts, kind of like Hot Wheels, you know, like a Hot Wheels track. You know how all the tracks have parts that are interchangeable. You can make the track longer, you can make it shorter, you know, and that's your own unique model. So that's how trading is as well. There's a ton of different ways to enter the market. There's a ton of different ways to manage a trade. Money management, risk management, you know, all of that stuff has to deal with a trade plan and a trade model. So the thing is, when we talk about order flow, okay, order flow usually has a starting point and an end point, right? So like take this, for example, literally today's example, take this. Here's your low and here's your intraday high. Okay, so in between the low and the high, we should find order flow. Okay, imbalances being respected, potential mitigations being respected, you know, up to the areas of liquidity. Okay, and if you've never studied this before, dude, you're missing out. Okay, you're missing out. I know we don't have too many people on here. It's Monday and it's noon. I get that, but dude, you want to fucking elevate your trading, or at least your understanding about price action, then you need to really pay attention here for just a minute. This here, okay, and you know what, I'll even label it for you guys. I'll even label it for, because I don't label it because I know what I'm looking at, know what I'm looking for. When I'm fucking zoned in, like I know. But for you guys, I'll do that, you know, just to prove a point. Okay, so the 5 and the 1, that just represents the time frame, nothing more, nothing less. There's no secret, you know, nothing. It's just, this is a 5-minute imbalance, this is a 1-minute imbalance. Okay, so part of the because I'm not going to reteach the model here on YouTube, you're just not going to get that, but part of the model is you can enter at a specific, you know, price point, logical price point, or you can wait for another reaction, drop down to a small time frame and enter there. So this is what I'm saying. All right, and this is the trade that I took today. So if you study this as an example, okay, if you look at price, you have the initial imbalance here from the news. That's tradable. Price comes back into it. I didn't trade that, but you could. That could be a second entry opportunity. The market rallies higher, drops down. This was my opportunity there. I didn't buy the low. I didn't buy this morning's low when I was fucking bullish. I didn't buy that first retracement either, but I did get in on this one here. So notice that response though. Is that a bad entry? Is that, you know, chasing price? Look at it. Fucking wicked it. It spends a little bit of time near the entry and then bam, runs for a new high. Now, personally, I thought it was going to come up here. I wanted it to come up here. I was looking for 42, like 42.03. We didn't get that. So I ended up breaking even on the way back down. I'm like, okay, that's fucked, but whatever. Then I see we create equal lows and I'm like, okay, well now I'm definitely not longing. What's good, Mr. John? I'm like, well, I'm definitely not longing now because now we have equal lows and that's one of the rules. I'm not going to long with equal lows. So I let it go. So then price goes to the target that I wanted to. It actually stopped short. It didn't get to 42.03, but I still would have taken partials in here. So that's it's unfortunate, but it's fine. Market comes down for the equal lows, right? But this is what I'm saying. These like retracements in here are opportunities is what I'm saying. Now today, personally, with these equal lows, I wouldn't take this. Okay. I wouldn't take that, but I'm saying there are multiple opportunities to trade, right? I mean, just look at the chart. That's a low, that's a low, that's a low, that's equal lows. I wouldn't say that is an opportunity, but technically is. And then that's a low as well. So you could have entered down in here, either one of those, or this one, right? So think about that. This right here today presented at a minimum like 5 entries, and plus the one I took was like 6. So that's like 6 different entries you could have taken. Not even mentioning shorts. You know what I'm saying? So do you always need a break of structure? No. Do you always need an imbalance? I prefer them, but they're not 100% necessary. So that's what I was talking about earlier. Like, I'm not trying to just shit on break of structure, but the problem is when people try to force 1 or 2 ways of trading the market onto everyone else. And I don't believe in that. There's a bunch of different ways to do this shit. And I've shown you each one of them. Otherwise, I would have flopped. That Wells Fargo idea would have fucking flopped. But it didn't. Oh, we're kind of pulling back today. That's a little sad. We were at 41. Now we're at 40 and a half. That's kind of sad, but it's cool. We're trying to swing this bitch anyway. But, you know, this low right here, March 24th, that low right there, that was the one and only day that it was below the low of 36.54. I said I would buy that if it went below that low like a week or 2 prior to that. That was our low for this year. Below last year's low. That's an opportunity. Or what I usually like to do is wait for that first retracement, that first reaction away. Look at this. March 24th, we made that fucking low. We rallied. Oh, but look at this. We didn't break structure. No break of structure, comes back into that imbalance. And I fucking screenshotted that. I showed my friends. I got to find that. I got to find that image somewhere. I take screenshots every day, but I took one right there on the fucking daily, right there on April 4th. And I said, watch this imbalance, see if that holds. And we run and we run and we run, bro. No break of structure. You do not see a break of structure here. These highs look like dog shit anyway. There's nothing right there. That's not a break of structure, but yet you see price fucking rally. I don't just say things. John says you don't need break of structure. Right, but I proved it to you before all this even happened. Like, come on, bro. Come on. There's no other way to teach. I can always, go back and say, well, look what happened here or look what happened there. No, bro. I've been saying you don't need break of structure. And this right here also proves it. JP Morgan, what I say about JP Morgan? That they were going to accumulate at this low or below the low and at that low, and that we would run for what? 145. Earnings shot us up there. I said, you know what? I'd rather see us come into that gap and then run. Guess what we did? A few days later, came back into that gap. I fucking tweeted that one too. Bam. Now we're higher again, bro. You don't need a break structure, dog. You don't need a break structure. This shit was hidden too. Watch this. Watch this. I got 5 likes on it. Watch this. Now it was in the evening time, 9:57 or 9:46. Sorry, 9:46. That was in the PM, right? But I was saying that at our earnings, I'd rather see us come into that gap and then go. We didn't get there until like 2 weeks later. My timing's not the greatest. I'll give you that. It's not. I can't tell you, oh, it'll be fucking Thursday of 2 weeks from now. I can't fucking do that. I wish, but I can't. It'll get there when it gets there. You know what I mean? And look what we did today. Oh, we gapped higher. No surprise there. No surprise there. What's JP Morgan doing? They fucking scooped up PNC, or not PNC, whatever that other dog shit bank is, right? Scooped them up. And now they're up 2.4%. You know what the options are up today? The options are up like 200, 300%. They were trading at like $56 on Friday. Now they're trading for over $240 on one of the contracts. I posted on my Instagram. 200, 250%. Handed to you. Fucking handed to you. Free. Free. On my Twitter. Free. I got 5 likes on it. Just 5. Come on, bro. People don't pay attention to the value of free. They don't. And one day I'm going to stop posting on social media. I'm going to stop posting trade ideas, and I'm just going to post it for members only, for people who actually want to pay attention. That's all I'm saying. Now, Wells Fargo's only up. They're only up 2% today. So, you know, it's not the greatest day in the world for Wells Fargo, but they're still, I think, they're the third largest bank still. So I don't bank with them. I think they're shit, but whatever. The only thing that I have on here is just another imbalance on the weekly. So I do want to see us trade higher, but obviously the better play is JP Morgan. So it's cool. But it makes sense. Not just from the price action, but just from, I mean, JP Morgan, they're the number one bank by far. So, I mean, they have, I mean, Google it. Google how much deposits they have versus everyone else. I mean, it's disgusting.